Joining us now with more reaction to this breaking crypto news is Crypto Council for Innovation Head of Government Affairs, Brett Quick. Crypto Council for Innovation is a crypto trade association with members including heavyweights like Block, Fidelity, and Coinbase. Welcome to the show, Brett. So Nick already broke down some of the nitty-gritty here. So I just want to start actually with a really big picture question here, which is, what does this mean for Coinbase? What is the big picture implications of this latest news?
Yeah, thanks, Emily. Thanks for having me. Glad to join you guys today. Happy to follow up on a little bit of what you guys were just discussing. Pulling back a little bit to sort of the 30,000 foot level, this is more regulation by enforcement from the SEC, more of what we've seen. Unfortunately, it's not tremendously surprising given what we've seen out of this agency. In the case of Coinbase, they have been asking the SEC for clear rules and for guidance on how they can comply with existing securities laws and how they can register. And just to add a little bit to what you all were outlining a moment ago, it's not just that there are onerous disclosure requirements and that it's expensive to register as a securities exchange. There are elements of existing securities law that simply don't work with the technological innovation of crypto. There are requirements that you have intermediaries in different parts of regulations that don't work with the technology, and they sort of negate the value and the benefit of the technology. I heard an example recently that I thought was pretty good, that, at one point there was a law in New York City that taxi cabs had to have a running meter in the cab. And the saying was that if they didn't have a meter, then passengers would get taken for a ride. And with the innovation and development of ride sharing apps with Uber and Lyft, et cetera, you don't have a running meter and you don't need that. And if you required that, it would sort of, take away some of the benefit of the technology of just being able to do it on your phone and it all being run through that and the convenience of that. So there are many instances of those types of requirements in existing securities laws that have been around for 90 years that just don't work with the technology, that have to be updated. And that's what Coinbase and others in the industry more broadly have been asking the SEC and Congress and everyone that's paying attention to this for clarity on, for rulemaking that address some of this and consider some of the problems with compliance and how to update these laws to make sense for the tech. I think the silver lining, to the extent there is one, of this type of development is that it will, force the establishment of case law that will inform, how crypto is regulated, and it will set some rules of the road for crypto to comply with. If you don't tell us the speed limit, we don't know how fast to drive. And I think that's been a constant refrain from the industry and from Coinbase.
Does this push innovation offshore? I mean, this basically, does it make it, this particular case, of course, is just one exchange being challenged on a couple of things, but ultimately, does it make it difficult for institutions to invest in crypto? When I say invest, not just buy the currencies, but to invest resources into development. Does it push it to places with jurisdictions where crypto regulations are more spelled out? So even if Coinbase were to succeed and prevail in court, nonetheless, the fact that you have an SEC that could at any time stop it, does it scare away innovators from the United States?
I think the answer to that, unfortunately, is absolutely yes. There are other jurisdictions around the world that are looking at ways to embrace the technology, to embrace the innovation and the developers that are working on it, and they're establishing regulatory clarity. The industry has been asking for years for the clarity and transparency that's needed to operate here in the United States, and they haven't gotten it to this point at all. There haven't been formal rulemakings, there hasn't been legislation. There continues to be a lot of signals out of this administration that are just making it hard for crypto to operate here in the US, which we believe have serious national security concerns, serious economic security issues, in the long term. If you look at what's happened with, semiconductor manufacturing, the US government has sort of realized that it's a big problem, that all of that is done offshore. That wasn't the case 40 years ago. Hindsight is 2020. and we don't want to be in that position down the road with digital assets. But as we look at sort of, MiCA legislation moving forward in the EU and several other, jurisdictions that are taking this seriously and really want companies to come and domicile there, I think it's perfectly, understandable that developers and builders are thinking about where they have regulatory clarity to really build and create jobs and ultimately economic growth that we really want to keep here in the United States and keep our sort of innovative edge.
So I just want to turn back to the shorter term implications here, which is that one of the interesting things about this case is that Coinbase is not going to go down without a fight, right? They're just basically like, bring it on, like, let's go to the court, right? But what is going to happen in the near term? Like, what I see happening is that Coinbase is going to spend millions and millions of dollars in legal fees. This is going to go on for a while. But what does this mean in the short term as they're fighting this out for Coinbase, for the industry as a whole? Like, what do you see as the short term forecast for just like how things are going to go while because this is not going to be settled anytime soon?
Yeah, well, Coinbase has certainly indicated that their services and offerings will continue as normal, that they're not suspending anything or changing anything about their business model while this is ongoing. Our hope is that this is somewhat of a wake-up call as well for policymakers in Congress. There's been recognition for a while that needs to be done in the crypto space. This development really just sort of underscores the need for legislation. And we're hopeful that the folks that have been taking this very seriously and working on it, that they will just take it all that much more seriously, realizing the actions that are moving forward from the SEC right now. Chairman Gensler is going to be in the hot seat next week in front of the House Appropriations Subcommittee, FSGG. Of course, that's an appropriations hearing, but I suspect that he may get some questions on this and other areas where there have been, criticisms of his performance at the head of that agency. Next month, he'll be in front of the full House Financial Services Committee, where I think he'll get a lot of questions and have to answer for a lot of the processes that he has pursued, and just the lack of information that's come out of the SEC in advance of these types of actions that they've taken. I think in Paul's tweet thread that was great that you guys highlighted at the top of the show, he talks about when Coinbase went public in 2021 and how their S1 detailed all of these different aspects of their business, and it mentioned staking. I think the number was 57 times, and the agency still, approved them to go public. So why are they sort of changing the rules of the road now without any sort of explanation? So we hope to see, a lot more legislative activity. That's much of it has already been underway, and as you said, this will be left to the courts to some degree, and the hope is that at least in that circumstance, you do have some established case law that will create some clarity, albeit not quickly, as you mentioned.
Switching gears, just want to touch on one other piece of news we received this morning, which is that the SEC is also suing Tron founder Justin Sun. They're alleging that TRX and BTT tokens are unregistered securities. I wonder, they're also suing a batch of celebrities who apparently were promoting the tokens. So I wonder how effective you think these actions will be.
Yeah, I was listening to you guys discuss this before. I missed Lindsay Lohan's endorsement of this, but that's fascinating. This case is one that I'm familiar with. I don't know all of the granular details. I think what it comes back to, again, at a high level, is that we need a regulatory framework. We need very clear rules of the road, and we need that both so that good actors acting in good faith can access the marketplace under guardrails, making sure that there is consumer and investor protection, and so that bad actors, to the extent that something is being done, incorrectly or not in good faith, and trying to take advantage of consumers and investors, that they're not able to have such access and take advantage of.
But the SEC will say, but the guidelines are very clear. There have been 100 years of laws on what unregistered securities are, so you should be able to figure it out.
Yeah, unfortunately, like we were discussing a moment ago, those laws aren't built for this technology. And it's a square peg in a round hole, so there have to be updates. If we could see a formal rulemaking process that updates some of those laws or creates new ones, I think there are a number of different ways to do it and proposals that the industry would be happy to see move forward. But absent that, it just doesn't fit. And I think we've seen that time and again. Coinbase in particular has done a great job of outlining that. They of course petitioned the SEC for rulemaking in the crypto space. They responded to their own petition, I think twice now, and have yet to get a response.
All right, Brett, thank you so much for your analysis. That was Crypto Council for Innovation Head of Government Affairs, Brett Quick.